I actually don't think the increase in Middle Eastern tensions, even if that were to transpire into attacks, will lead prices significantly higher. Even in the past, we've seen traders actually sell the news, and unless and until there's an outright supply outage, we aren't actually going to see prices move up materially. In the short term, of course, there's a risk premium that's kind of coming back into the price. It hasn't been in there for most of last week, I would say. So yes, you could get $1 or $2 here or there, but generally speaking, the view in the market, including ours, is that we do not actually expect outright supply losses from these escalating tensions.
This is fascinating and something that we have heard from other people. Amrita, do you think that yesterday's response in crude markets was tied to what we heard with the U.S. moving nuclear capabilities to the Mediterranean to back up Israel?
I think there is definitely a part of the price move that can be attributed to that, because tensions are rising, and even recently Israel has sent warning signs by attacking oil depots in Iran, saying, look, oil facilities are not off the target. Now, again, not the base case that they're going to actually attack oil facilities, but that can't be ruled out. I will say, however, is that the underlying impact or the underlying driver of oil prices has been this continued tightness in the Atlantic basin. U.S. production growth is slower. We actually are staring at very, very low, or potentially record low utilization in U.S. stocks by the end of this month. That's why the note we put out yesterday, we called it stocked out. And I think that's the bit that's underlying the strength in the market. You've seen the WTI backwardation closing in on $2. And I think that's separate from the Middle Eastern tensions.
When you look at the IEA report today, Amrita, it says that global oil markets are going to go from deficit to surplus. So where does that leave the big producers? Do you think they're going to have to ratchet back some supply?
Yeah, and our balances have been showing that for some time now, that we have a huge draw in Q3, but flips to a very small kind of flat to build next quarter as OPEC gradually starts to unwind. But what I will say in terms of OPEC policy, they always have mentioned, or maintained rather, that all their policy is dependent on market conditions. Should inventories build too much, and we've seen a bit of a macro scare recently as well, then they will reconsider their decision. Of course, no decision has been taken yet. It's still a couple of weeks before they have to do so. But again, I think they will remain vigilant. As of now, our balances do show that they are bringing back barrels.
But what's the floor? We do see this risk premium coming back into the price because of what's going on geopolitically in the Middle East. But what's the floor when it comes to supply and demand? Does OPEC Plus, you get the sense, want to at least be able to hold $75 for Brent?
I think, again, OPEC Plus is not targeting a price here. They are looking at fundamentals. But where we see the floor for crude is around $80 for Brent, because, yes, fundamentals in Q4 do not look bullish, but right here, right now, stocks are very low. So when you are building, but from record low stocks, you automatically provide yourself with a significant buffer, or rather, like, you are able to build a lot more before the market becomes oversupplied. So I think it's a nuanced point, but I think it's an important point, is where are we starting building from, because that makes a big difference. And remember, we've also got outages in Libya. Sharara, we've seen kind of through our satellite imagery that, that's been offline as well. So again, those things, if that continues, it makes it easier for OPEC, for instance, to bring barrels back and still have $80 Brent as the floor.